Heya Cryptozens, it's 10 p.m. Pacific time. The date is October 19th, 2022. Welcome back to the Crypto Overnighter. My name is Nikodemus, and I'll be your host as we take a nightly look at the crypto, NFT, and metaverse space and the industry that surrounds it. And keep in mind, nothing in this show should ever be considered financial advice. Turkey's President Erdogan unveiled a new blockchain project today. It's called the eHuman project, and President Erdogan made the announcement in advance of Turkey's National Blockchain Summit. And apparently, they're putting this project on the blockchain to protect all of the services, data, and capabilities of this new system. So this is a kind of a job school matching service. It's a place where students and graduates and public employees can look for job and training opportunities in the public and private sectors. Also available are training certifications for public servants, as well as career fairs, events, and educational content. So this is, among other things, a way for the government to share information about careers, remote education, and finding a job. Now, prior to this, Turkey's national car company formed a strategic partnership with Ava Labs. They're the creators of the Avalanche blockchain. The aim of that partnership was to develop fast and safe services backed by smart contracts. Now, you might not know it today, but Turkey used to be pretty crypto-friendly. That is, until this same President Erdogan decided that he didn't want crypto in his country. So, there was a ban put out on crypto payments in April of last year. And even still, that crypto-friendliness remains. Events like Istanbul Blockchain Week and Blockchain Economy Istanbul. One local developer has plans to try to get the next DevCon to Istanbul, which is not at all surprising, given that Chainalysis reports that Turkey is in the top 20 for crypto adoptions, even after the payments ban. Now, frankly, I'm just sort of surprised that the ban is even in place still, given how much the Turkish lira was tanking earlier this year. It's just bad and been getting worse. That said, that's crypto. This new Turkish project is not crypto. It's just blockchain. So while Erdogan isn't a fan of crypto, he's not totally against the blockchain. Turkey had announced plans for their own national blockchain infrastructure. However, that was pre-pandemic. And in the post-COVID-19 world, that may have been temporarily or even permanently derailed, because there's been no updates since the program's initial announcement. Now, going from Turkey to nearby Israel and a look at one of their blockchain projects, specifically at their bond markets. So, the Tel Aviv Stock Exchange and Israel's Ministry of Finance had an announcement to make today, along with custodian services provider Fireblock and cloud computing company VMware. They're going to be testing a blockchain-backed platform. And this platform will let users trade digital bonds that have been issued by the Ministry of Finance. This information comes to us from a local media report on the 19th. Now, this project is called Eden, and it is expected to not only reduce costs, but to also improve the performance of national bonds issuance. Yali Rothenberg is the accountant general, and he said, quote, "I believe the blockchain-based technologies are here to stay, and over time will permeate the core of the financial markets, thoroughly and deeply altering them. It is our duty to constantly examine new technologies and methodologies." So this test involves trading tokenized government bonds. It will let people use the digital currencies that they have in their wallet. Then they swap that currency for digital representations of the government's bonds, and the proceeds of the sale goes to the wallet of the Israeli government. Now, they haven't said what currencies they would allow for this test, and this pilot project is expected to be completed by Q2 of next year. And there have been a few banks and countries that have kind of dabbled in digitizing their bonds. Not many, though. Australia in 2018, famously El Salvador in their Bitcoin bonds. The European Investment Bank issued like 100 million euros in digital bonds. Meanwhile, the UK has said that they're interested in government bonds. Speaking of the UK, we've got Adam Jackson. He's a fintech lobbyist in the UK, as well as the director of policy at Innovate Finance. And it was at a meeting of UK lawmakers that he said the Bank of England needs to be aware of the crypto industry's competitive nature. especially where issuing a central bank digital currency is involved. So apparently, they're considering introducing measures to regulate stablecoins. And it was part of their deliberation on the UK's Financial Services and Markets Bill that they took up the subject of the risks posed by blockchain bridges and coin swaps. He said that there's a question of, quote, whether we could apply a competition objective to the Bank of England when we think about things like central bank digital currency and how that's implemented. He also cautioned that a CBDC could, quote, crowd out innovation and stablecoins unless it's designed in a way that promotes competition. Now, this bill was introduced by the UK government back in July, and it ensures the ever-present Financial Conduct Authority takes into account both international competitiveness as well as the country's economic growth before creating rules around the crypto sector. Also in the bill are rules around using stablecoins as payments, because it's his concern that the UK is being left behind by their EU rivals. At present, the EU's market in crypto assets law is much more robust than any regulations the UK has drafted so far. He said, quote, the government has said before they will be bringing forward proposals for wider regulation of other crypto assets. He added, quote, if that isn't the case, are we going to have to wait another 20 years before regulators are given the powers to regulate crypto assets? Another speaker was Mike Haley of CIFIS. CIFIS is a nonprofit dedicated to fighting financial crime. Now, Haley said that the anti-fraud measures included in the bill have not kept pace with the crypto industry. And also, he questions whether the law is broad enough to include the authorizations a regulator would need to take action on crypto services. He held up cross-chain bridges as an example. He said, quote, already we are looking at money laundering through coin swap services, which don't need an account and may not be under this regulation. Now, this news comes as the UK's Office for National Statistics says their consumer price index went up by 10.1% in the last year. This is an increase from 9.9% last August. According to their data, quote, rising food prices made the largest upward contribution to the change in both the CPIH and CPI annual inflation rates between August and September 2022. The BBC points out the effects of the Ukraine-Russia conflict on grain prices, as well as a 30% increase in the price of dairy products. Now, in order to understand what's going on now, you have to go back a bit to the ouster of Boris Johnson. When he resigned, Liz Truss took over in the PM slot. With her, she brought Kwasi Kwarteng as the role of Chancellor of Exchequer. Truss and Kwarteng proposed measures to fight inflation. The market recoiled in horror. That led to a dramatic plunge for the British pound, almost hitting parity with the US dollar. And then the Bank of England started printing money again. Jordan Walker is the CEO of the Bitcoin Collective. He said, quote, given the current policies in place by Bank of England and our government, double-digit inflation is quite obvious. I feel like it is a wake-up call for many people in the UK to start learning about why this is happening to our money. And you know what side of the street he's coming from. He's in the Bitcoin Fixes This camp. He feels that hosting the UK's Bitcoin conference will help people understand why this is a problem and how Bitcoin can fix it. James Dwyer is a founding member of the UK's Bridge to Bitcoin. And when asked about it, he said, quote, there are two components to inflation. One is supply-demand mismatches caused by disruptions such as COVID, responses to COVID, and war. All we normally hear about are these, as politicians argue these are events outside our control. And he continued, and this is important because this is their key point. Quote, what we don't hear so much about is that other component of inflation is monetary. And since 2008, governments have encouraged central banks to both directly buy their debt, money printing, and indirectly to encourage them to get banks to increase lending. Again, money printing. Now let's talk about Japan. The Japan Virtual and Crypto Assets Exchange Association has put forth some suggestions to change crypto-related laws in the country and their exchanges. So what they're talking about is making it easier for authorized exchanges to add virtual coins. Now, this would not apply to tokens that are new to the Japanese market. And we've covered it on this show before. They feel like the pre-screening process takes too long and should be dropped altogether. They would also cover things like initial coin offerings. Genka Oda is the association's vice president, and he said, quote, "We hope the latest measure will help revitalize Japan's crypto assets market." Now, they're trying to make it easier for startups to get their foot in the door. If you remember, last August, Japanese officials said that they were looking at tax reforms to keep crypto startups from leaving the country. And that was because Japanese crypto groups pressured the regulators to stop taxing paper gains. Now back here to the United States and touching on a subject we just talked about earlier tonight, that of central bank digital currencies. Jim Hines is a U.S. representative from the state of Connecticut. He serves on the House Financial Services Committee on their National Security, International Development, and Monetary Policy Subcommittee. And he's throwing his support behind the development of a U.S. CBDC because he doesn't want the U.S. to be left behind. So he says the U.S. should continue with the development of a CBDC pilot project. He said that we should continue to work on a CBDC so that when the time comes, quote, "We've got the option to move forward if we need to. Why would you exit the game before you even know what the game is going to look like? We could do the research. We could set up a pilot program for a CBDC." And if you want to look at it that way, that's right. If we're going to pursue a CBDC, we're behind countries like China and the Bahamas. Even Australia, Japan, and Iran, they're all ahead of us, as we've reported many times on this show. But the thing is, I'm okay with us never deploying a CBDC. But that's just me. Anyway, Himes said, quote, "Why not build a CBDC platform upon which innovators could build payment systems, remittances, and businesses? It could serve as the platform for private sector innovation." And he calls it a huge political decision, and it is, that needs to be handled before we can move forward. That much I agree with. I just don't think we will ever need a CBDC. We could adopt a handful of stablecoins to serve the same purpose. Okay, changing gears here from governments to banks, because just days after kicking Kanye West off their platform, JP Morgan is back in the news again. This time with a personnel announcement. They created a new role for Aaron Inove. He is their new head of crypto regulatory policy. This comes after an 8-month stint as the head of policy and regulatory affairs. So it looks like JPM is taking advantage of the bear market to add to their digital regulator scope, especially in the face of such a dramatic drop in the value of crypto, as well as several companies going bust, which is something that Aaron would know about because he used to work for one of these companies. When I said that he had 8 months as the head of policy and regulatory affairs, that's not at JP Morgan. No, that's at the Celsius network. The same Celsius network that went under last July. That same Celsius network that is under federal investigation. In fact, if you listen to counsel for the creditors, they're under a lot of investigations. Quote, "Celsius is apparently subject to enforcement proceedings or investigations in at least 40 states, in addition to investigations or inquiries involving the federal government." Now, I'm not saying anything that happened to Celsius was this guy's fault. But I don't think that I would hire this guy for the job of keeping me legally compliant when that was his job at his last workplace and failed so miserably. Now, moving from a traditional bank to one of a more crypto variety, we have the German crypto bank Nuri, and they have some bad news because they're telling their 500,000 users to get out. Another victim of the bear market, Nuri plans on shutting down and liquidating. We first heard of liquidity issues for them back in August. That was when they announced that they had filed for insolvency. Now, the plan was for them to struggle along, come up with a restructuring plan, and find a buyer. They never found that buyer. Christina Mayer is Nuri's CEO. In a blog post on the 18th, she noted that despite their best efforts, Nuri would have to shut down. Now, we were just talking about Celsius, right? Well, here you go. The difference is when Nuri got in trouble, they didn't shut down customer withdrawals. In fact, Nuri is encouraging all of their users to completely divest themselves before they shut down on December 18th. Quote, Customers have access and will be able to withdraw all funds until the aforementioned date. All assets in your Nuri account are safe and unaffected by Nuri's insolvency. Trading will be possible until November 30th, 2022. And the bank cited both economic as well as political conditions that kept them from raising funds or finding a buyer. And further, they said that one of their business partners went insolvent, which pushed them over the edge. Now, the rumor is that partner was Celsius. According to Mayer, this has not soured the company on the subject of cryptocurrencies. She said, quote, "We still believe in innovative financial technology and are convinced that blockchain, cryptocurrency, and decentralized finance will offer opportunities that add true value to the lives of people. Still, innovation should be safe, understandable, and easy to use for as many people as possible." And we're going to leave it there for the night. I want to thank you, my listeners, because when you stop listening, I will stop talking. We'll see you tomorrow night.